Hi, and welcome back to today's More Report on Wednesday, the 6th of January, with me, Rich Perry, market analyst at Hantec Markets. Moving on to dollar yen, and we've still got the downside move. The shift into safe haven trading continues. Now, the momentum on this dollar yen chart is increasingly negative, and you'd argue you need to now decide whether this is an oversold chart or just a very, very strong downside move. I think it's sort of becoming a bit of a strong downside move because you do have this consistent selling pressure over the past 3 weeks, really, and pretty much ever since the Fed in the middle of December. Big selling pressure on the dollar yen, and it's continuing. The RSI is consistently now below 30. It did get that move in August, didn't it, where it just had a massive sell-off, and you could see that sort of situation again, where the RSI just dips, it continues to fall into oversold territory. Now, the interesting fact is that we're now retracing seemingly towards the 1804 level, but I would show you also, just with the fibs, that there's another fib you can do from that August sell-off that suggests that around 118.50, which is pretty much where we are at the moment, and again actually helped to form the basis of the floor through to September, October. Around this 118.50 mark is another Fibonacci support level. So you have got the basis of support, almost 50 ticks, I suppose, between this low here of mid-October and that 23.6% fib level. So the fact is that it's I'm caught between two minds, really, because I think this is a growing strength in this downside move, and I think we are going to get a test that 118.04. I don't necessarily think it's going to break, because I think you are now coming back towards these fib levels that could well provide that basis of support. Clearly, you've got momentum indicators that are negative. That is a given. You've got the MACD lines, which continue to fall away. Stochastics, which again are turning lower, even as they're in oversold bearish territory. So it does look very negative on that. And you'd still say that on an intraday basis, selling strength is the way to play it. I mean, you've still got, over the last few days, any rallies are being sold into. You've got the basis of resistance that comes in around 1880 today. Yesterday it was coming in around 1920, bit of a pivot level there, and the big near-term level is 1970. So a few levels for you to work with, but looking at the hourly momentum, very negative, consistently in the lower reaches of the of the range, reaching 15-16 area a couple of days ago, and consistently failing around the 55-60 mark. So that is consistent with very negative momentum, and also the MACD lines negative, stochastics also negative. So you'd still say selling into strength on a near-term trading basis, but I'm just a little bit concerned that again you're starting to come back to some key levels of support. So to continue to sell it on a multi-day basis, I'm happy to sell on an intraday basis, but I think on a multi-day basis you need to be a bit careful, because you are approaching these key levels of support. So I wish you good luck in your trading on dollar yen today, and I'll speak to you later. Thank you.